What has just happened? It is Thursday, the 2nd of November today, and we've had a monumental change to interest rates. Interest rates have, in fact, doubled over the last couple of hours. But hold on a second. Hold on a second. Let's get real. Interest rates have increased from 0.25% to 0.5%. 0.25% was the lowest ever recorded interest rates in history since we've had interest rates, and 0.5% isn't really that much higher. So the reason they've increased interest rates is because they've been 0.25%, the lowest level ever, for over 10 years, and really they had to do something. Inflation has started to increase. In fact, we're about 3% on inflation right now, and what they had to do was increase interest rates so we could curb inflation. But part of the reason that we've got inflation is because the pound has weakened, and what that's meant is that the imports are more expensive. So it's not really a representation of what's going on with the economy. In fact, the current growth forecast for the UK is 1.6% year on year, which is a really kind of not very good growth forecast. And obviously, not just to mention the other thing that we have on the horizon, Brexit. Brexit! What's going to happen with Brexit? So the answer to that question is no one really knows. Even Theresa May doesn't know herself. And all that uncertainty, what that really means is that everyone kind of holds fire on everything. No one does anything. And that's really going to stunt growth as well. But coming back to Leeds Investments, why is this still a good idea? Well, first of all, as I mentioned, it's not really going to have that much impact. 0.25 to 0.5% really means maybe another £5, £8 on your monthly repayments. And because we're making so much additional return on investment, that extra amount is not really going to have that much impact at all. The second thing to note is that these are long-term investments. We tell all of our clients these are investments that we want to hold for a while. And on that basis, the interest rates are going to increase. Of course they do. They go up and down, and we will ride them through. Now, we don't think there's going to be another interest rate increase for a while still. If there is, it's going to be risky on part of the UK MPC, Monetary Policy Committee. And the final thing to mention as well is that we model all of our deals at 4% interest rate anyway. So really, a lot of our clients are getting kind of in the mid-2s, the 3%. We've got a lot of buffer in there already built in for these interest rate increases that may or may not come in the future. So we're all good still. So although interest rates have doubled, we're still in the all clear, and it is a greater time than ever to get involved with property investment outside of the stagnating London market. See you soon, guys.